let's start off taking a look at the charts as usual and just kind of see where we are in the big scheme of things. And interestingly, we got a green E.W.S signal today. I'll come back to that in a second, but we've been sort of trading sideways in this box I mentioned last week, and I was saying that, you know, at some point we're probably going to break out here or here, and I drew these lines and these lines, not sure which way we were going to go, and you just, you know, you never know. And that's as long as I've been doing this, there's nobody with a crystal ball. Trust me, I've followed a lot of guys, looked at every possible indicator, and it's just not there. I did have a comment from another student. John had mentioned that we've just been yellow. You know, we had a couple greens, but remember, if we don't get at least, I usually go for 3 greens, but at least a couple greens, you know, and it stays that way. You know, we go back to yellow and we don't do anything. So, which is one of the reasons we won't go to a green adjustment today, because we want to see that this sticks. But you know, when you're trading sideways, yellow is appropriate. That's exactly what you're going to get. And what it says is that, you know, the market just can't decide. And actually for us, that's a very good thing, because we keep our directional risk very flat when we're yellow, right? We're going to keep our deltas very, very neutral and just collect theta. And if we can do that for, you know, 2 weeks plus, you know, it actually works out really well. So so that's kind of where we are. Get rid of these drawings since they're not, it doesn't appear that they are going anywhere. And so we broke out of this, and hard to say, you know, obviously where we're going to go, but it would not at all surprise me to see us, just like I drew the lines here. And believe me, I don't have any particular crystal ball insight. This is just luck that it kind of followed the lineup, but it's a common pattern. And we've all seen this pattern over and over and over again. When we break out of a range, or when we break out of or break through a point of resistance, we go up, we frequently will come back down, and that will now act as support, and then maybe launch into something more. Like, here's a good example, right here, right? We broke through, we came up, came back down, and that same area acted as support, and then we kind of launched into something else. So this is every week I look at the same areas of support and resistance, and every week it's the same kind of patterns that we see. Not every week, but when we see them frequently. And so, you know, these are simple patterns, just basic support and resistance. And then when there's breakout, it flips from resistance to support or support to resistance. Very common. And I think one of the most reliable kind of patterns, there's a lot of people who look at patterns in stock charts. They look at, you know, everything from trend lines like we looked at here. And by the way, we're coming right up to the trend line and the 200-day moving average, which often act as areas of resistance. We're going to see if that happens. If we are to bust through them, they will probably act as support. But a lot of times you also, though, keep in mind you can get a fake out, like this is a fake out, this is a fake out, where you go a little bit through, but it doesn't last, and it doesn't stay. And so in those circumstances, that's really, and that's why I always draw these areas as ranges. They're never exact, they're always ranges. But in the general area, you're going to find, you know, like this, support, 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 you know, resistance. We've seen it over and over, resistance, support. And here we are again, it acted as resistance for 2 weeks, and we finally busted through. And now I'm going to guess we're going to catch support in that area at some point. I don't know if that's tomorrow, the next day, the day after, I have no idea. But that would be my guess as to what's going to happen. And, that might shape my deltas a little bit, depending on my market opinion. So far, we try to keep our deltas pretty much exactly in line with what E.W.S tells us, but you've seen a couple examples, and we'll start to maybe over time use these areas to shape our deltas a little bit. Anyway, what I was gonna say is there's so many different indicators, and there's people that look at everything from candlestick patterns to types of candlesticks, to all these indicators, these hundreds and hundreds of indicators that are on, just look at all these indicators. Oh my goodness. And they all say something. Most of them are related to price. So they're sort of telling you if price is trending, or moving averages, moving average convergence, divergence, MACD, that's a popular one. But the reality is, I have found the most reliable to be simple things. And I've tested these algorithmically. Many of these, I used to write code where I would write the code for a certain indicator, back tested over a period of time. And I can't tell you, just, I've done that many dozens of times, maybe hundreds of times, looking at all different, not just different indicators, but the parameters within each indicator, because there are, different numbers of average days and things. There's a lot of different parameters in every indicator. And what I will tell you is that most of them are not reliable predictors of price. And that's why there's just people that can't predict the market. There's just nobody like that. That's why that doesn't exist. It's not a thing. What I find to be the best, the best indicators are just very simple things like support and resistance, the 200-day moving average, because a lot of people follow it. It tends to be interesting. And then some of the market internals, which are how we get the E.W.S signals. Which are, you can go back to live call number 2 if you really want to get a deep dive, but basically trying to watch what the institutional investors are doing and follow along. So anyway, there you have it. A little bit of looks like action related to our major support area right here around 39.25. And then we now have a green E.W.S signal. Now we're still going to treat it like it's yellow, because we want to see 2 to 3 of those, depending on how aggressive we want to be. We want to see 2 to 3 of those before we actually shift to the green mode, to our our standard rules. So for right now, we're keeping our deltas flat. And the good thing about that is you can't really get hurt that way. If you keep your deltas flat, you don't really get hurt. You might not make as much money if you were directionally trading and you were picked direction right, but if you pick direction wrong, you're in trouble. So we're just going to keep our deltas flat for right now, continue to collect our theta, and that seems to be working just great. So if you're watching on YouTube, by the way, and I know a lot of people do, please don't forget to like and subscribe.